Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of the S&P 500, ticker symbol SPX. And so I wanted to go over this because at the end of 2023, I put out a video suggesting it might be a good time to short the market. And since then, the market has gone down a little bit, up, down, and then crossing this level just above $4,800. And so it's been hitting all-time highs. So that was a little too early to short the market, but I do think we could be nearing the time to do that now. And so basically, 4,800 was hit at the beginning of 2022. And then following that, crossing that new level, 4,800, it spent 2 years below that level, going down as low as just below $3,500 and then coming back up. So over the course of 2 years, it took to get back to that level. And now we just crossed off kind of the next level, going from 4,800 to now 4,900, which was the high on the day, January 24th, as I record this on Wednesday in the middle of the trading week. And the close on the day was just below $4,900. It does look like we had a little bit of a topping tail on the day, closing at the low here, red candle. So that could be suggesting that we will be seeing a reversal and a potential pullback, whether that's over the course of a couple days a pullback, or it could potentially be a 2-year pullback again. And so I think that it might be a good time to short the market now. And so I'm going to go over the tickers that I went over in the last video and see where they are at since that last video, how they've performed, and where they might be going to, because we do have some downside with the SPX to these gaps that I have marked here in blue. So I do feel that those are targets that could be hit in the near future, with this more recent low being on October 27th of 2023. So that is kind of a target for us to be looking at with these other short ETFs. And so the first one I'm going to go over is the SH, ticker symbol SH, which is the ProShare Short S&P 500. And this is 1x leverage, or it's not leverage, it's just inverse the S&P 500. And so we can see where it's at right now. And if we look on the monthly time frame, we can see right over here, we can see that it's gone down 1.62% since I made the last video, since it was on the last trading day of last year. And so, that's a little bit of a pullback, not too bad. And if we do take a measurement back to the highs here on October 27th, we can see that from today's high, that would be a return of about 19% there. So not too bad over the course of a few months. And then if we look at the next one on the list, which is the SQQQ, so this shorts the NASDAQ, and this one's actually leveraged at 3x inverse the NASDAQ, so you're going to be getting about 3 times the amount of return. You're also, however, going to get 3 times the amount of pain. And so over the course of January, we can see that the price has gone down by nearly 11%, so much more than what we saw with the SH, ticker symbol SH. But if we do take a measurement going back to the local highs of, let's see, this is October 26th was the local high then. And so if we take a measurement from the close of today back up to the high there, that represents a 94.5% return. And so there's a little bit of risk with that, but there's a lot more return, a lot more reward with it. So I do think that is something to consider if we are to start seeing a pretty notable pullback in the market. And then finally, I'm just going to go over the SOXS, which is the short semiconductor index. And this is also 3x leveraged, just like the SQQQ. And so if we do look at this, we can see that over the course of the past month, price has gone down by over 20%. So this is much riskier than the other two, twice as risky as the SQQQ. But, there's also going to be more reward. So if we do take a measurement from the low, going back to the high of, let's see, October 31st for this one, we would actually get, and from the low of today, or the close of today, which is a red candle day, we would then be getting a return of over 200%, so that's 207%. So while with this one, there is a lot more risk to the downside, there's a lot more potential for return. So I do think that's pretty interesting. And so as we do start to see a potential pullback, or even if we see a rally up to 5,000 in the SPX, it does seem like it is overbought and that we will be seeing a pullback. So I do think that there could be some nice ways to make money on that, whether that's in the SH, which is a little safer than the SQQQ, or if you want to go full on risky, the SOXS could deliver some pretty great returns, but it's also, like I said, fairly risky. But it is also pretty cheap per share, less than $5 per share, whereas the SQQQ is about $12 and the SH is also right around $12, $13. So something to consider as we move forward in the new year, making all-time highs in the market. We might be having to pay the price for that soon, so might want to try to short it and make a little bit of money on the way down. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.